Okay, in this quick video we'll look at what determines the price of a share, a fairly fundamental question, but it's a question that we get asked on a fairly regular basis when people come to us for one-off share sales. I'm using here an example of Insurance Australia Group, or IAG. It's a share that a lot of our clients want to sell without opening a trading account, mainly because they acquired the shares through the demutualisation back in year 2000. So you're looking here at what's called a market depth screen in a program called IRIS, which is the software program that most stockbrokers in Australia use to, if you like, view the market. So IAG market depth is in this window, and the stock is currently trading at last price of 585.5. That's $5.85 cents, and you can see it just changed. It dropped half a cent. So I'll just explain to you what you're looking at here, perhaps just out of interest, so you get a bit of insight into what determines the price of a share. So we've got two parts to this screen. We've got here the buyers on the left-hand side and the sellers on the right-hand side, or the bids. The buyers bid and the sellers ask. And the buyers are in reducing price orders. So you can see here there's one buyer. That's what this number here means. There's one buyer who is attempting to buy 6,000 shares in IAG at $5.52. So that buyer has put in what's called a limit order, and they've specified the maximum price they're prepared to pay is $5.52. And as we go up, there's 7 buyers here who collectively want to buy 20,677 shares at $5.70. So you can see this buyer ranks above this buyer because they're willing to pay a higher amount. And of course, we take that right up to the extreme, right up the top here. There are 18 buyers who are prepared to pay $5.85, and they are the highest ranking because they are prepared to pay the highest amount. Over here we've got the sellers, and you can see it's ranked in reverse order, so it's increasing as we go down. And that's because sellers compete with one another by offering lower amounts. Just like anything else, if I'm selling something on Gumtree and I want to get greater priority or be more attractive to buyers, then I'll offer a lower amount. And the same goes for shares. It's just an auction, yes. So we've got one seller here who wants to sell 200 shares at $6.12. That person's being beaten by this person who is prepared to sell for $5.97, and so on and so forth. So you can see that the most attractive sellers in the eyes of buyers right now are those that are willing to sell for $5.86, and the most attractive buyers in the eyes of sellers are those that are willing to pay $5.85. So this is the highest bid, and that is the highest offer. And that generally the market price will fluctuate between those two. Now, if I bought IAG right now and I wanted to buy it instantaneously, the lowest price that I can currently acquire IAG shares for is $5.86. If I wanted to sell IAG right now, the highest price that I can get for my shares is $5.85. So this last price here, $5.85, means the last transaction went through by somebody selling to the bid. Over here you can see what's called the course of trade, which shows you the recent transactions that have gone through. The last 5 trades have occurred at $5.85, and before that there was one trade of 13 shares at $5.85.5, and so on. So that's IAG. I'll bring up another share, say BHP. A bit more action here. So $35.25 is the high bid, $35.26 is the best offer. But you'll probably find that'll change pretty rapidly, from moment to moment. So you can see these numbers of shares changing here. And that's because it's currently somebody just came onto the bid, another buyer. So that number's 19. And if somebody sells to that bid, then that number will drop. There'll be less shares being bid at $35.25. So these numbers will fluctuate. There's another buyer, so 20, 21, another buyer. So we're still high bid 25, high offer 26. So if you wanted to buy BHP right now, you would have to pay. Yep. So now it's high offer 25. So what happened there is somebody took out all those 25s. there was like 4,000 odd shares there, so it's 160 odd grand just went through in one moment. So now it's bid 24, offer 25. So if you wanted to buy this, you could now get it for 25. So the share price just fell one tick, one price increment. What causes the share price to fall is there's more selling pressure, and the sellers become more attractive to buyers by offering lower amounts. And if there's more buying pressure, so we bid 25 again now. There's more buyers than sellers, then the buyers will outcompete one another again with price, and the price of the shares will go up. So that's what drives the movement of shares, and in fact any commodity or any product is supply and demand. So what we do at One Off Share Sales or Sell My Shares is we obviously put your order directly into this market. If you're a seller, then we'll just put your order in, and generally hit the bid. Or sometimes we will try to put your offer on your sell order on the market here, and get a little bit more for the shares if we can. But I guess in summary, we attempt to get the best possible price for your shares in the time that we have available to us. That is, generally we sell within the day, and make sure we can extract as much value as possible. So quick little lesson there. Hopefully that was a useful little video and gave you a little bit of insight as to how the share market works.